So we got about 1 day to go before the upcoming election, but I just wanted to take this opportunity to kind of share my trading strategy. This period around election, it's often unpredictable, and while this is a pretty broad topic, I'm going to break down some of the key areas I'm going to be watching. I'm going to be including indices, gold, and some major currencies. And by understanding how these markets might be impacted by the election results, you can better prepare yourself for the volatility that is most likely to come in the following days and weeks. So before we dive in, we're going to take a look at the current state of things. We're going to be using this website right here, and I've been tracking the election probabilities, and things have changed a lot significantly over time. At one point, I think the candidate, it was one person had a solid lead, but now literally things are neck to neck. The odds are basically even. This is a pretty unique scenario, though, compared to most of the past elections where, you have one candidate that's usually held a clear advantage for most traders. This basically means one thing: you're going to have a lot more volatility. So when the political environment it's as uncertain as it is now, markets often you're going to see some really intense swings in situations, where the result could go either way. Traders, they're going to have to brace for much more stronger movement depending on who ends up winning. So we're going to go over some markets that are particularly a little bit more sensitive to the election results, beginning with gold. So as you can see, gold has been a really important asset to watch. This last year alone, price has surged as mostly you have a lot of global uncertainties with, a year to date, we have an increase of over 30%. So when people, they start to feel uneasy about the world's stability, they'll normally start to gravitate towards gold. It's more of like a safe haven asset. This year alone, numerous global events have kind of began to fuel this trend. You have inflation, you have a lot of sources of instability. Gold itself, naturally, it seems to rise above most of the other assets. So what could happen to gold? How I see it, if Donald Trump ends up winning, there's a pretty strong chance that gold, it'll likely continue towards the upward trajectory. Policies that he enacts, they tend to be a little bit more polarizing, so it can create additional uncertainties that drive investors towards safe haven assets like gold. During the previous term, though, for example, I think Trump's some of his trade war with China, it kind of spurred a lot of significant market uncertainty. His approach to tariffs and some of his trade deals, they kind of led to disruptions in the markets. It kind of made people uneasy about the future of some of the international markets. This is why I think if Trump, if he is reelected anyways, if he reengages with some of the policies like tariffs or with other measures, there's a lot more sanctions. It's going to create some more turbulence. Gold could see even greater demand as it starts to become much more secure investment. On the other hand, though, if this opponent wins, we might see gold start to go sideways a little bit more than rather just continue. Even we might to see a much more safer correction. Nonetheless, I do believe that regardless of the election outcome, gold itself, it will start to retain a solid foundation, much because of some of the other ongoing concerns like national debt, which is beyond any single administration's capacity. So if you start to take a more broader view, there are enough global factors to really keep gold in a much more bullish position. So for the stock market, though, the market itself has been kind of slightly pulling it back ahead of some of the election results. This is pretty common pattern when some of the trades, they start to brace for, as the markets, they kind of dislike the unpredictability of it. My perspective, though, is that once a winner is declared, the market might react positively simply because the ambiguous information is going to be resolved. But it doesn't go without repeating here whether, the victor is Trump or his opponent. The stock market could experience a relief rally once the uncertainty is kind of behind us. One scenario, though, I do think would be especially favorable for the stock market is a situation where the executive or legislative branches are kind of split between the parties. For example, if you have a red president with a blue Congress or vice versa, historically, though, some of the markets, they tend to perform pretty well in those kind of situations. And the main reason why is because it kind of helps to reduce the likelihood of significant policy shifts. So when neither policy or when neither party, they really don't have total control over one decision, there's pretty radical legislative changes that are much less likely. And this stability is generally appreciated by investors. For stocks, though, it's less upheaval upheaval kind of translates to much more greater predictability, which obviously is going to fuel the markets as reward with bigger gains. However, if you do start to see a divided government, this could create a much more ideal environment for the stock market to grow in a much more controlled and predictable way. If I start to see strong pullbacks in key areas during this period, I'll start to consider then potential buying opportunities for trades. It's about capitalizing on the dips caused by some of these elections, but as always, obviously, it's pretty wise to be prepared to pivot and kind of remain flexible, or best case scenario is just not to get in trades whatsoever. I could also see some pretty bearish signals for oil, and while some other markets such as, the euro and the yen, they're beginning to show a little bit bullish sentiment as well. But I'm going to be holding back on major moves, until we see the election results and we can kind of see the ensuing market reactions. You might want to wait for the dust to settle a little bit better so that we can really get a more comprehensive understanding of where exactly the market's going to go. This week also is going to be featuring a Federal Reserve meeting within like 48 hours of the election. So that's going to add another layer of complexity and uncertainty in the markets. One last thing I wanted to include in this is the put-call ratio. This is another indicator that's definitely worthy looking at, especially during the election periods. So last Friday, there was a huge spike, I think, in the ratio, which often signals that the investors, they're going to be becoming a little bit more cautious and they're going to be buying insurance on their portfolios. If you're new to options trading, basically a put is like a bearish bet or a form of insurance on one of your orders. Traders buy them normally when they think that the market might go in decline. So when we see a huge uptick in the put call ratio, normally it suggests that the investors, they're kind of hedging some of their bets. So the spike is noteworthy mostly because it kind of aligns with the uncertainty surrounding the election. For contrarian traders such as myself, high out activity normally is a signal that potential opportunity for the dip buying. Essentially, if people are scrambling for some of their insurance due to fear, it might create a little bit more opportunity to scoop up some of the assets at some of these lower prices. This kind of goes back to what I was talking about beforehand. But just remember that this is just one of my many indicators, and this should not be the sole factor in making any of your trading decisions whatsoever. Speaking of trading decisions, I did pass my prop firm earlier last week. I would have been putting in a lot more trades, but considering that there's going to be a lot of turbulence around this week, I'm mostly just going to be playing it safe. In addition, I do manage some of my trades in real time within a Discord group where I do share some of my entries and analysis as well. This is going to allow members to see each trade that I make while it happens, and so that they can understand some of my reasoning behind each of these decisions. It's also available if you're interested. You can find it in the link in the description box below. Before you consider joining though, I would appreciate it if you would smash the like button for today's video, and also consider subscribing if you would like to see some regular updates. I've also been covering some other topics like passing the prop firm challenges, as well as various other strategies. But, as we head into election day, it's vital to stay informed, remain flexible, and keep yourself prepared for some of the both sides to be expected and the unexpected. The markets are likely to experience really significant moves in the coming days, and understanding, that the likely scenarios, they're going to give you an edge, whether it's, through buying gold or for safety. If you're going to be taking advantage of some of the stock market dips or using tools like this for more detailed analysis, having a game plan really is key. I'm really hopeful though for a smooth outcome. I'm also ready for any twists or turns that might going to be showing up. The goal here really is to navigate the uncertainty similarly and to make calculated moves when some of the opportunities start to arise. But remember, please, no strategy is foolproof, and if you're trading, it does involve risk, and the key to that risk is to stay informed, remain conscious, and trade smart.